Welcome to this Foundation to Accounting course. If you are a student trying to understand accounting or a business owner who wants to make better financial decisions, this course is for you. In this first lesson, we are going to answer a very important question. What is accounting and why does it matter to everyone? Many people hear the word accounting and immediately think of complicated numbers, difficult rules, debit and credit, financial statements, and confusing calculations. But accounting is not as scary as it may sound. In fact, accounting is something we interact with almost every day. When a business sells goods, buys stock, pays rent, receives money from customers, pays workers, borrows money, or invests in equipment, accounting helps us record and understand what has happened. By the end of this lesson, you should understand the meaning of accounting, the uses of accounting information, why business owners must understand accounting, and why accounting is often called the language of business. If you are a student, this lesson helps you understand the purpose of accounting before you begin learning the technical parts. Many students struggle because they start with debit and credit without first understanding why accounting exists. This lesson helps you connect theory to real business situations, understand why transactions are recorded, understand why financial statements are prepared, stop seeing accounting as only calculations, and build confidence from the beginning. If you are a business owner, accounting helps you understand your business beyond the cash in your hand or the balance in your mobile money wallet. Money coming in does not always mean profit. A business can have high sales and still make losses. Accounting helps answer questions about profit, products, customer debts, supplier debts, expenses, expansion, cash, pricing, borrowing, and hiring. It is a management tool, not just a tax filing tool. What is accounting? Accounting is the process of identifying, recording, classifying, summarizing, analyzing, and communicating financial information to help people make decisions. In simple terms, accounting is a system used to record business transactions and communicate financial information to people who need them. That definition may sound long, so let us break it down. Accounting begins when a financial event happens. Accounting helps us identify, record, classify, summarize, analyze, and communicate the information so people can make decisions. Examples of financial events include a business buying goods for resale, a customer paying for a product, the business paying rent, the owner investing money into the business, and the business taking a loan from the bank. These transactions affect money, assets, liabilities, income, expenses, or the owner's interest. Imagine you run Majesty Nuts cashew. During the month, you buy raw cashews and packaging materials, pay transport, sell packs to customers, and supply some shops on credit. At the end of the month, you want to know whether you made a profit, what customers owe, how much you spent, what stock remains, whether you can raise stock, and whether the business is growing or struggling. Accounting helps answer these questions. Without accounting, the owner may only guess. Accounting is more than bookkeeping. Bookkeeping and accounting are related, but they are not exactly the same. Bookkeeping is mainly about recording financial transactions such as sales, purchases, payments, receipts, and expenses. Accounting goes beyond recording. It uses those records to prepare reports, interpret performance, analyze the position of the business, and support decision making. Bookkeeping collects the information. Accounting uses the information collected. If a bookkeeper records that a business made sales of 50,000 Ghana cedis during the month, that is useful. But accounting goes further and asks how much profit came from those sales, what expenses reduced profit, whether customers are paying on time, whether the business is spending too much, and whether the business can survive for the next 3 months. Why accounting matters? Accounting matters because every organization deals with money and resources. A school uses accounting to manage fees, salaries, books, buildings, and expenses. A church uses accounting to record offerings, donations, projects, rents, and welfare. A shop owner uses accounting to track sales, inventory, debtors, and profit. A company uses it to prepare statements, pay tax, and report to shareholders. Government uses accounting to manage public funds and show accountability. Accounting is important for everyone who manages money, resources, or business activities. Who uses accounting information? Accounting is useful because many people depend on it to make decisions. These people are called users of accounting information. We can group these users into two categories: internal users and external users. Internal users are people inside the business, while external users are people outside the business. Internal users. These are people inside the business. Owners use accounting information to know whether the business is making profit or loss, how much money is coming in and going out, which products are selling well, whether expenses are too high, and whether the business can grow. Managers use reports to plan, control, and evaluate performance. Employees are interested because financial health affects job security, salaries, bonuses, and promotions. External users. External users are people outside the business. Investors use accounting information to decide whether to invest. Banks and lenders assess whether the business can repay a loan. Suppliers decide whether to sell goods on credit. Government and tax authorities assess taxes and compliance. Customers may be interested in the stability and reliability of a business they depend on. Accounting is often called the language of business because a language is used to communicate. Accounting communicates financial information about a business. It tells the story of what the business owns, what it owes, what the owner has invested, revenue earned, expenses incurred, profit or loss, and whether the business is financially strong or weak. If a business reports revenue of 100,000 Ghana cedis and expenses of 80,000 Ghana cedis, accounting helps us understand that it made a profit of 20,000 Ghana cedis. If another business has assets of 200,000 Ghana cedis and liabilities of 150,000 Ghana cedis, accounting helps us understand that it owes a lot compared to what it owns. These numbers speak. but they only speak clearly when you understand the language. A common fear is, what if I am not good with numbers? Accounting is not only about mathematics. Most basic accounting uses simple addition, subtraction, multiplication, and division. The real skill is understanding what happens in a transaction, what the business received, what it gave out, whether it earned income, incurred an expense, created a debt, or received an investment or withdrawal from the owner. Accounting is a skill that can be learned step by step. This course begins with what accounting is, then the accounting equation, double entry, transactions, journals, ledgers, trial balances, adjustments, and financial statements. By the end of the course, you should see how everything connects. Let us look at this example of Majesty Nuts Cashew. Majesty Nuts Cashew is a small business selling roasted cashew nuts. The business starts with an investment of 5,000 Ghana cedis. The owner buys packaging materials and raw cashews, pays transport, sells some packs for cash, and supplies some shops on credit. At the end of the month, the owner wants to know whether the business is doing well. If Majesty Nuts Cashew did not keep proper records, the owner might only look at the cash available and make a guess. That can be dangerous. Some customers may not have paid. Business cash may have been used for personal expenses. Inventory may remain unsold. A supplier may still be owed. Or sales may be high while profit is low because costs are too high. Accounting helps Majesty Nuts Cashew show how much was invested, how much was spent, how much was sold, how much customers owe, how much profit was made, how much stock remains, and how much the business owns and owes. Accounting turns business activity into clear financial information. Key takeaways. Accounting is the process of identifying, recording, classifying, summarizing, analyzing, and communicating financial information. In simple terms, accounting helps us record business transactions and communicate useful financial information. Accounting helps people make decisions. Its users include internal users such as owners, managers, and employees, and external users such as investors, banks, suppliers, government agencies, and customers. Accounting is the language of business. It is not something to fear. It is a skill that can be learned step by step. Now that you understand what accounting is and why it matters, we are ready to move to the accounting equation. The accounting equation shows the relationship between what a business owns, what it owes, and the owner's interest in the business. In the next lesson, we will answer, what is the accounting equation and why must it always balance? See you in the next lesson.